Alrighty, welcome back to another edition of the Gold Rush Weekly Watch List. Happy to have you back. Happy to be here. We have a pretty big week in earnings coming up. A lot of big names are reporting that will have an effect on the market. Let me just take a look. I have them here on my phone here. So massive names, massive names. So I'm just gonna name them off as I see. On Monday we have NIU, Zoom. Tuesday we have Lowe's, DKS. We have BJ's AutoZone. We have Intuit. We have Urban Outfitters reporting on Tuesday. We have Pan W, Palo Alto. Wednesday we have Kohl's, XPeng. Nvidia is a massive one. Snowflake, another massive one. UiPath reporting on Wednesday. Thursday we have Best Buy. We have Dollar Tree. We have TD Bank, which should be the last of the banks. You know, this should be the end of earnings season. After the close, we have Costco, Autodesk, Ulta, Marvell. Let's see, Workday, Restoration Hardware, and then on Friday we have Big Lots. So some names you might be familiar with, some names that you've definitely seen us trade. You know, especially like Nvidia. We've done Best Buy in the past. Marvell gave us a monster week this week. XPEV I haven't traded in such a long time, but a lot of, Snowflake obviously is a staple in the Gold Rush community. So a lot of major names that can potentially give us money this week. Right now, we don't like to trade through earnings. Like, we don't like to hold and hope. It's like truly gambling, but we can play the potential run-ups on some of these names, right? Like Marvell has been running up for the past couple of weeks, and it's on my list for tonight for us to look at it. So if you like any of those names, think about which ones are poised. The industries are strong and are poised to show continued strength into their earnings. If something is reporting tomorrow, I would just call it a dub, unless you're day trading it. Same thing for Tuesday morning. Anything beyond Tuesday afternoon, you can start thinking about swinging, but that's up to you. So I have a bunch to go through today, and I'm going to just go through as quickly as possible. Quick look at SPX. So SPX has been let me go ahead and just draw. It's been wedging for a very, very long time. And this past week, it kind of, the wedge is really more like here, right here. And this past week, it kind of decided to make a nice, strong move up based on some of the stuff that came out of the Federal Reserve speakers. So good catalyst within the Fed to move the market higher, right? We filled the little gaps, and we've kind of, we went sideways towards the beginning of the week, and then towards the middle of the week, we kind of made a strong bounce, and continued to move into Thursday, and even on Friday. And this past Friday was an OPEX Friday, which typically are red days, but even with the OPEX Friday, it gave us a nice move at the beginning of the day, and another nice move at the end of the day, right? So before it started chopping around. So I see a potential continuation just based on the strength, and then we do have the higher lows activating SPX to go much higher. We did break above the previous highs on the weekly. We do have a small gap to fill here underneath 42.18, which is my next target. Once we fill that gap, from there it might come back down to try to retest some of this previous resistance here at 41.68. So it really depends on, I think, what the broad market is going to do, right? What some of these names, Nvidia, Snowflake, how they're going to report, which will dictate which way the market will decide to go this week. So very interesting. The next one, and another, if you're brand new to this, I go through SPX, I go through some of the sectors, and then I go through the names, right? So the first sector that we're going to go through is tech. QQQ was trading within this broadening formation here. right? Here's a high, here's a low, higher high. It didn't come back to retest the lows, and it has all this moving average support, right? The blue line is a 20, the 50 is the red line, the black line is the 200 day, right? And the white line is 100 day. So all this support here, so it came back to the 20 a bunch and never looked back. It just continued to rip. Ignored my broadening formation here. It did kind of show weakness in buying pressure on these days. It was like 4 days within pretty much the same price channel. And then again, Wednesday, we got some bullish news and just expectations worked in the favor of bulls for this to move upward out of this channel, out of this broadening formation, and into previous resistance, and then through previous resistance, right? So we're at price that we haven't really seen for quite a while. The last time we were sitting at this price, it was back in April of 2022, so over a year ago. So good spot for QQQ. And then if you look at it, we have like a inverse head and shoulders. Here's your shoulder, there's your head down there, maybe another head or a double tap, whatever, and then like another shoulder here, right? And then like a cup and handle. There's a lot of bullish behavior on QQQ right now. So you can tell with this acceleration, it's looking really strong. Again, Nvidia will dictate where QQQ goes for the week, in my opinion. Along with like Apple, Microsoft, right? But I think Nvidia is going to be the one that's going to say, oh, we're going to continue to move up after this week, or we're going to fall after this week, right? XLF has been trading within this wedge. Let's go on the weekly real quick. It's been within this wedge for quite some time. I was looking for it to bounce here, which it did. It came back to retest it, and now it's kind of in no man's land. Financials have been showing weakness. There's some news that came out with Wells Fargo that DYT posted earlier in the room. The fourth largest bank in the US and has been kicked out from the DTCC. Now the DTCC, I don't know what the hell it was. So I looked it up, and let me just pull it up. The DTCC is, if my phone wants to load, the Depository Trust and Clearing Corporation. So they create solutions that help markets grow and protect the security of the global financial system. So for one of the major banks and one of the biggest banks in the world to get kicked out of that means that organization no longer wants to offer their protection or their insurance to Wells Fargo. So that means to me that Wells Fargo is being exposed for their shady behavior. Maybe there's something that they reported that caused the DTCC to say, you know what, we can't really stand by this. Maybe it's going to come out in the news in the next couple of weeks. So let's just keep our eyes on that, right? With that type of news coming out and a potential move in a potential shift in the trust of the public of banks, if there is something bad to be said about Wells Fargo and just larger banks in general, then I expect for XLF to come back to retest this low and maybe break through and test some of these lower targets here at 30.26 and 29.59. But we will see. XLE Energy bouncing on support. It broke through on this day. And then found, I guess there's a bunch of buying pressure right in this area here at 76.95 or so. Bunch of buyers stepped in and brought the price up and gapped it up. And it didn't fail hard on that OPEX Friday. So it's in an interesting spot. I kind of want to see where it does on Monday, Tuesday, see if it comes back to retest this trend line or if it tries to go straight into the 20-day. So we'll see. First name is Coinbase. Now, these are in no particular order. I'll just show you real quick. I have it so that I have all my, they're by flag, so I know what we're looking at this week. And Coin just happens to be the first one. I'm not particularly interested in Coinbase. To me, there's nothing actionable on it right now. Like it's trading within this range between 61.18 and 56.78. Now, what I do like is that it rejected the 200-day a bunch, right? It got up above it and then it immediately fell below it the next day, and then it tested it each day for pretty much the entire week, from last Friday into this previous Friday, and even with a positive earnings catalyst, good reports. I see they're spending money because I'm seeing ads on TV when I watch during playoffs, so they're spending money. That's a really good commercial too, actually. But it couldn't overtake that 200-day moving average. Just zoom in on it. It couldn't overtake that 200-day moving average, and so I think that tomorrow Coinbase needs to test that 20-day and see where support lies there, right? If there's no support through that 20-day, I think we can come back to testers 53.75. If we do break above the 200-day, we still have the 50-day to fight with. But if we get through both of them, I think we can get very quickly to $65. So it's just a name that I'll be watching this week, especially with 7 days of consolidation. I think that there's going to be a big move that comes out of this. So very interested in Coinbase. Apple. I don't really have much to say about Apple. I mean, it did break out a little bit and continue to move. It's been following the trend. It did pull back to almost the 20-day moving average, which we want to see. We want to see these moving averages touches, so we can, so it's not like super extended. And because when you get super extended price, it usually has to pull back to it pretty hard the way that it did here, right? And we don't want. I mean, I'm a shareholder. I don't like playing Apple puts. I like playing Apple calls, right? So, we always want to see the slow and steady movement up, right? But it's still holding trend, still forming higher highs and higher lows. Here's our higher high. We can now safely come back and form a new low. I would love for that low to be above all this resistance here, where all these wicks are, above that 173.61. And this, as you can see, it's red on your screen. This is a previous supply zone for Apple. If you go to the weekly, you see as much, there's some indecision that occurred here, and then a massive push down, came back to the area, pushed down again, came back to the area, pushed down hard, right? Every time it gets back to this area, it pushes down very, very hard. So now these orders seem to have gotten filled up, and now as we move higher into the zone, we're filling some higher orders. They might not be as strong as some of these orders, right? Like the orders that were sitting here that pushed price all the way down. So we'll see. I think it's in an interesting spot. I want to see it. And Apple's very close to all-time high, extremely close to all-time high, right? All-time high for this is 182.81, and we're currently at 175.16. So we're very, very close to all-time high. And my expectation is that when it reaches these levels again, it's going to pull back hard. I expect it to pull back hard just because imagine all the people who wanted to sell back here when Jay Powell and them said they weren't buying anymore, right? Back here, all their orders are just sitting here waiting, chilling. And there's not people like you and me that are like actively managing our portfolios every single day. These are people who are like, all right, $2 million order, set it and forget it. When it hits, it hits. I don't want to think about it, right? And $2 million to move the price down will make a big difference. So that's what I'm expecting. I'm obviously always watching Apple. Right now, I just want to let you know that it's trading within a supply zone, and perhaps the supply zone is getting weaker, but we'll see. We'll see tomorrow. Next one is Microsoft. I like Microsoft for a continuation. Obviously, everyone has a positive sentiment for. I was going to say something totally different and inappropriate, but I'm just going to say positive sentiment for AI at the moment. And Microsoft is just like these other companies, and they've announced AI partnerships and how they've been integrating artificial intelligence into their technology and into their products. I think that there's a continuation here. I think this, especially after this consolidation of a couple of weeks, nice accelerated move. We have an inside bar that formed on Friday, right? Just zoom into a little bit. We have this inside bar that formed on Friday. So we didn't break the range of the previous day. And as you all know, that this is one of my favorite setups because we like to play predefine the ranges. We don't like to guess. So break out of the high of day, can retest the previous high of day, and then from there pop into the 319. We have 319, then we have 323 previous levels on a weekly from way back here. And then break down below low of day. We have a nice double sized candle move, right? Like if we can take this candle and we can fit it right here. We can fit it right here. So it would be a nice move. And that was, let me just see what it was. 318, 316. So $2.50 move on Microsoft. So if you are $2 out of the money, or $2.50 out of the money, actually is I think how those chains are spread out. You're it's just a nice 100% play if you got one candlestick that forms coming down, right? So either way, there's a good setup to both directions. It is a little extended from the moving averages. I'd like to see it pull back, but if it doesn't, that's fine, right? If there's strength, why go against it? So I like Microsoft. I do like it to the upside because it didn't retrace 50% of this candlestick. So there's a potential for a 3-bar play here, which would just be one more candle, just like the size of this candlestick, forming, starting here and breaking up and hitting that 319.04 target. So I do like it to the upside. Next one is LRCX. LRCX just gave us an absolute banger last week. If anybody held it from the Monday when I called it into Thursday or Friday, I mean, you got paid. You're balling, and you should just not trade for the rest of the month off that one trade, right? The one trade, it was $2.26. It went to $45. So that definitely made somebody's month. So nice consolidation, breakout move, inside bar pullback, didn't retrace beyond 50%. So it's kind of the same setup as Microsoft. I want to see it hold these levels. If it does fall, I want to see it retest the low of day of Thursday. And if it doesn't fall, then I want to see it break out and start to form some new highs, right? Now, I don't know if it's that 600 seems like it was a tough level to break. So I just want to see it, maybe if it can retest that level. I like the risk reward better to the downside, because look at how much room there is from the bottom of this candlestick to the bottom of that candlestick. There's a nice gap there, volume gap that can get filled, right? So I'm interested either way. I like LRCX. I think that it's going to have a lot of money for us. Maybe not this week. I mean, 4 days of straight run. It might have to cool off for a few days, but when it does move, I'll be sure to help us to catch some of that move. AMD. Does AMD report? No, they reported. So AMD is going to move off of NVIDIA earnings. So if you're interested in swinging through NVIDIA earnings without getting killed by NVIDIA IV crush, or getting gapped up or down opposite the direction you're thinking of going, AMD a couple weeks out would be a nice, I think, a safe play depending on what you think is going to do. On the technical, this thing is bullish, right? We have these lows. The lows got lower, and then the lows started getting higher. They pulled back, retraced, found support where it had previous support over here, formed the channel, and then just made a massive move out of this channel, right? Now we do have a inside bar right in the middle, smack dab in the middle of the candlestick of Thursday. So this one you can trade a couple of ways, and depending on how risky you are, I like to take the breaks of highs of day, lows of day. I like to take hourly breaks depending on where things are going and where the support and resistance is. But this is the setup for your calls. Obviously, you take calls at the break of the high of day. First target would be the previous day's high, and then the final target for this would be 109.50. Same thing, break below the low of day, previous low, and then you can test the previous low or previous open right over here. Let me go ahead and set. This would be the target, the final target for a downside move. Now, for those of us that are a little bit riskier and like to get in on early entries and have a higher risk tolerance, you can use the body as your entry points as well. So, which gives you a much better, it's obviously much riskier, but the earlier the entry, the more tightly defined the risk. If it moves in your direction, you get rewarded much, much more, right? So you could take the break of this and then target the high of day and the high of previous day. Take the break of the close, target the low of day and low of previous day. So very, very nice setup on AMD. It's easily one of my favorites in the market. So we'll see what it does tomorrow. Next one is Amazon. Just zoom out for context. All right, so Amazon's trending upwards It's been forming higher highs and higher lows. I'm just gonna skip all the other ones. All right, I'm just gonna skip them. You can see them. You can see that it's just where it's going, right? Which direction it's going in. So I don't mind it. I'm bullish, right? Obviously. I don't mind it breaking down a bit and retesting some of this area here at 112 for some support. I don't mind if this red candle here, it's a black candle, right? But this down there here is the higher low. I don't mind that either. I don't care. As long as it holds this 113.40, this area here, or even comes down to this 112.50-ish, and then continues its way up. That's what I'm looking for. You know, a breakdown of that structure would bring it back to some of these moving averages. One of these moving averages might act as support. For now, I think as long as it remains trending in this upward direction, I think that we have, there's no reason to go against the trend for Amazon. And then the final target above that 119.99 would be 121.46, which I think there's a little bit of a supply zone there based on this doji here, this green candlestick, and then this massive move down. So this is going to be a key area to break up above this 120. Between 120 and 122 is going to be a very, very interesting area for Amazon. So if you're interested in Amazon, I would just go ahead and mark your chart with that, you know, this little box here, these levels here. It's going to be a very interesting area for Amazon. So yeah, and then I set some of these levels. I didn't, you know, because this broke down. It's a two down bar. It's a directional down bar. So it broke down below the previous low. It's still kind of an inside bar setup if you think about, like, if I were to do like a, you know, I mean, there's no way it's gonna really work out, but if I were to do like a 2-day kind of chart, if I were to combine this move with this pullback, the pullback is so shallow into the move that, you know, that it's just like kind of a small little retracement, right? Just a little pullback, some profit taking, for a continuation move, right? So I set the high of this day as an entry target, and you want like $1.50 move to the upside, and then the break of the high of the previous day or the close of the previous day of Wednesday would give us a $2.50 move to the downside. So it's like this, like a very similar setup in both directions. You know, I think if you're gonna play the downside, I would just scalp it. Because this thing is just showing so much strength out of this, you know, out of this pullback consolidation and then nice move up. There's just so much strength there that it doesn't make sense to, you know, you just don't want to short it. I mean, and if you do, just be fast with it, right? Don't get greedy. And again, you know, this is something that it's gonna be a major topic of conversation for us coming up in a couple of weeks when we start the small account challenge in June, because the most challenging part of the small account challenge isn't going to be finding plays. The plays will come in abundance. I promise you that. The toughest part is going to be maintaining discipline to say, oh, you know what? I'm happy with 15% profit. I'm happy with 20% profit. I'm not even going to, let's glorify that, right? Let's make it, because it's like, let's say you have $100 in your account. And you take a 20% trade. That's like finding $20 in your jacket pocket. I mean, anybody would be happy with that. So the emphasis is going to shift from massive bangers that we know we can do. We can hit 1,000% plays, no problem. We can hit 100% plays, no problem. How many 10% plays can we stack up? How many 20% plays can we stack up? And what kind of difference would that make for you if you traded 20 days in the month and you got 20 plays all worth 20% profit? That's a game changer in your account. Right, and that's a game changer in your mindset. So very, very excited. That would be awesome. So that being said, if you want to play a downside, start on the challenge, right? Let's take 20, 15, 30%, right? 10%, whatever the case is on the downside, because all the strength looks like it's going to continue to the upside. So that's Amazon. Next one's RCL. RCL formed an inside bar after a nice bull flag consolidation bounce inside bar. You know, and now all these inside bars are based on the holding pattern that the market was kept in based off of OPEX. OPEX is the reason why we have these inside bars. So I think there's a continuation unless we hear some terrible news in any of these industries. I think there's a potential continuation for RCL. I want to see it break above 80.23 in order to try to target that 82.47. That'll be like a 2 or 3 day swing, 4-day swing, nothing crazy. Maybe even like you buy contracts for next week, and once it touches your target, you can get out, right? On the opposite end, it tested support on Friday. It tested support on Thursday, right? And it held up. But if for whatever reason it tries to retest that support and fall down, it's gonna want to test this resistance here at 77.77 as a potential support. So you can fit a nice candlestick in here that's worth about $1.25 or so, right? So, and RCLs, it's not the most expensive one. You go one out of the money and let it do work for you. So I like it to the upside. I wouldn't mind it to the downside either. There's a lot of setups like that this week actually. So very, very happy with where the market's doing this week. Starbucks is another one. Starbucks has been stuck in this holding pattern ever since it formed this massive candle on earnings, right? Now, we did form a higher low because you can see this low here, you see this low here, and the 100-day and the 50-day are both acting as a support level. But major rejection on Friday. Even though the rest of the market didn't reject as hard, Starbucks, the rejection is just insane, right? So, and it's just so close to the highs and the lows that I just marked those, right? Just take the break of the previous day, take it to the upside, 108.12. We can meet that 20-day, see what's up with it. Take it to the downside. Now, through the downside, it has to go right through these two moving averages. If it can get through these moving averages with strength, then I think that it can come back to test the low here at 103.80, where I believe there is a demand zone based on what I'm seeing all over here, right? I believe there's a demand zone here, so I can, nice move down, nice bounce up. But I like it. It's, again, giving us predetermined entry and exit, clean targets, some nice moving average support, which supports the upside move. 20-day acting as a potential target spot, right? So I like, and I love Starbucks. I haven't had Starbucks coffee in quite some time, but I do love the ticker. I do like the company a lot. Netflix. I don't like to trade Netflix a lot. Personally, I don't like to call Netflix a lot. I'll tell you why. Just give me 2 seconds. My issue with Netflix is that they are extremely expensive. Their premiums are very, very expensive. I'd rather play SPX. I'd rather play LRCX. I'd rather play... Now, don't get me wrong. Obviously, look at this big ass candle on Thursday. This candle, and it had so much momentum, it didn't even alert my trigger. It didn't even alert me when I did it, right? So don't get me wrong. Netflix can do it, right? The low of this is 346. The high is 375. That's $30. It's a $30 move. Imagine you're $10. So that's the thing. It's expensive. You have to go out of the money. You just don't want to get stuck on a day where it does it puts a doji in like this and doesn't really move, or a day like this where it doesn't really move, right? You need to catch it on days like this. You need to buy it here and sell it all the way up here. Like that. That's how you play Netflix. So I don't love playing Netflix. Jake has an amazing eye for it. But I do like where it's at with the chart. Obviously, it's forming a potential 3-bar play. We got the big expanding bar. We have the small, shallow, indecisive bar right within the middle. Didn't retrace beyond 50%. All the moving averages are pointing up. Let's see if we can continue to break out. I got some upside targets here, 379. Above that, we have 390, right? If you can match the energy of this candlestick, we can get to that 390 very, very quickly. And I don't want to, when can we get another $30 day out of Netflix, right? Give me a $10 day. I'm happy with that. Give me a $5 day. I'm happy with that. $5 day, you get a nice shift in the chains from one spot up or down, right? Same thing with a $10 day. You get two spots up or down on Netflix. So that's what you want. You want that big movement in the options chain. That's how you get those 100% plays. So I like Netflix for a continuation to the upside. I'm not going to mark levels on it because I just, to be honest, it just needs to have that breakout. It has to have a trend day, breakout day. Netflix will be one of those to trade when everything is moving. You see Apple green, you see QQQ green, you see SPY green. When everything's green, trade Netflix. if it's giving you some strong levels. This was a bunch of previous resistance and chop. You see all this price down here. There's not a lot of price up here. We have these two candlesticks, and then there's some way back here, but I think some of this can be ignored at this point, right? Like we can break easily through that and test at 391. So I'm gonna put my target there. I like this level here, but this level there. But again, I defer to Jake. He's the Netflix whisperer. Next one's Nvidia. Nvidia, they report earnings this week on Wednesday in the afternoon, and listen, this thing was as low as $108 at the end of last year, and it's currently sitting at $312. This thing is an absolute monster. It's right near all-time highs. Right near all-time highs. Nothing has really changed in Nvidia's in their business segments. I think they've integrated AI. But this isn't an AI run. This is just all this is just like, okay, like, yeah, we sold it because this thing ran from whatever it was here at $137 all the way up, straight line up to $300, $350. And now we just have to take some profit, bring it right back to where we got it at, and then buy it up again, right? This move obviously was accelerated by some of the coronavirus relief spending that the government was doing, the Fed was doing. Now we are, now money's tight. Interest rates are high. Borrowing a loan is expensive. Everything costs more money. Yet Nvidia's here still rising. So, that's a show of strength. Everything's supposed to really. This market is truly disconnected from the economy for real. But you can tell that in a lot of names, and Nvidia is not one of those names. So I like it to the upside. Again, if you want to trade through earnings, you can go ahead and play Nvidia. You can play AMD as a catalyst. Use Nvidia as a catalyst. Inside bar, break above the high of day, previous high 330. Break below low of day. Nice little gap to fill into the bottom of the day, 303, 297. We're very extended from that 20 days, so I would love to see it pull back to it at some point, but through earnings, it might not, it might just go parabolic. So we'll see. We'll see this week. Next one's Tesla. Tesla is interesting to me right now because it has finally gotten above the 50-day. It broke out above that red line and gave us a green day on a day where everything else was flat or red, right? So it shows strength. Now, and we did get we got kind of a bearish cross here, but this 20-day moves so fast that it just doesn't matter. If this thing's gonna turn right around and rip right through that 100-day, this blue line straight through this 100-day. Excuse me. So I want to see Tesla break above high of day, and then there's a little bit of a range here, a little chop here, right? Looking at the body of this candlestick here, just pull it across there, right? Oh crap. The body of this candlestick here, right? That's where I think break above this level, get into this area, and then chop around for a little bit. Maybe not. Maybe it doesn't chop. Maybe it just says, you know what? Let's just rip it back to 200. Actually, I think Elon's new Twitter CEO is set to start soon. I think this week or next week. I don't know if it was weeks or months, but they're set to start soon. And so if that's, with all of the pressure that was on Elon and on Tesla stock due to the Twitter acquisition, now that he's kind of pulling back from it, and now he can go back and refocus on Tesla. And I think that's what shareholders want, right? They want him to focus on Tesla, focus on what he's been doing that works on the Tesla side. Forget about the political stuff with Twitter. Focus on, the societal stuff, the humanist stuff that you're working on with Tesla. So we'll see. Maybe it just rips through, but I like it above this 181.95. I like that 189.69 as a final target for Tesla. Next one is Marvell. Marvell went absolutely nuts this last week for us. I might have had a play for it. I think I had like 2 plays for it last week. The setup is an inverse head and shoulders with a shallow, or actually that's a very deep retracement. So we had this move coming from here all the way up, pulled back, didn't pull back the entire move, came back and retested that low, and then bounced from there. Went straight through the moving averages, straight through that 200-day, straight through into the 786. That's the next target, the 786 fib here at 46.12. And then above that, the next target would be this 47.10, where I see a bunch of resistance there, right? And then the first target would be, I'm just gonna draw it there. Let's just call it the 786 fib. Actually, I can move it up a little bit there. There, perfect. And then above that, back to the high, the swing high. So I want to see a continuation with Marvell based on, either the inverse head and shoulders, or now a double tap on a fib, or the break through the 200-day with some moving averages about to cross through. A lot of bullish behavior on MRVL. For those of you that don't know, Marvell is a semiconductor microchips manufacturer. And they report earnings on Friday, so we have a potential little run up between tomorrow and Friday. So we'll see. We'll see what it does. Next one's TSM. TSM has a nice inside bar. Now, same thing. TSM is Taiwan Semiconductors. They actually might be poised to make a nice little move to the upside based on the MU news. With China banning MU because they think they have some cyber security concerns regarding MU. But we do have this wedge on TSM. TSM always forms little wedges and rising wedges and falling wedges all the time. They're hard to see because it gaps like this, but they're always there. So it has a nice little wedge. All the moving averages are consolidated for the most part. The 100-day is like about to go parabolic right now. We broke above the trend line here. Now there is looks like a little bit of a supply zone here based on this rip down, pullback, test, fall hard. But we'll see what happens. They did form an inside day on Friday, just like everything else. So the setup is break above the high of day, hit the previous high, break below the low, hit the previous low. Into this area, we have some sell pressure, I'm sure, that's sitting there waiting. Below this low, we have a nice fair value gap. We can go from here, from this candlestick all the way down to 85 or so. We do have the moving averages sitting there that might act as resistance, but even still, from where it's at now to even the bottom of this candlestick, it's a big move. So I like TSM this week for a move. Even if it's like a 2 or 3 day move, that's fine by me, right? That's to be expected. The next one is Meta. Meta is another one that I don't really have a great finger on the pulse of it. I used to. I'm just so disconnected with it. But one thing about Meta that I like is that it's now trading within this gap, the infamous gap that brought it below 300. And it's been below 300 ever since this earnings report. I think this is when they announced that the metaverse, they're gonna put so much money into metaverse, and then it doesn't end up even being profitable. But I don't know where they are with that, but all I know is that on a technical sense, this is now trading within a gap, which means there's not a lot of volume in this area. Although if you look back here, there is a lot of volume in this area, but this is a lot of old price. I'm sure a bunch of these people who bought here all sold it up here. So I think that it can be fairly easy to get through, through 250, 260, 270, right? Or 250, 255, 260, 260, however you want to do it. I think that doing it in fives is probably better with Meta, just because some of the bigger days that it has, it's like a $4.50 move, right? This is a pretty big day, and that was a $7 move. So I would just consider that. But I think Meta has a nice, really nice move into this gap. That 200 is just a magnet. I mean, sorry, 300 is just a magnet. I'm just not sure how long it's going to take to get there, but I see it for sure in the future of Meta. Definitely by September, we should be at 300. If we continue, now we do have June OPEX, which is typically one of the worst for tech, right? Seasonality for tech is not great in the summertime. So that June OPEX might give tech a reason to not go up as quickly, right? It might go flat, it might go down, but we'll see. Let's just keep that in mind. But I think 300 is doable for sure by September, right? Depending on what the OPEX does and what the market does. Next one is Pinterest. I like Pinterest for this little bounce that it had, plus this consolidation, lower high, little breakout move, making new highs on back-to-back 3 days. I want to see it test the previous high here at 2308, and then it can work its way into this 2450, where the 200 days moving average is sitting. So very simple setup. Break below, we can test the low the previous day, break above, test this, and then trade into the gap. The 20-day is gonna cause a potential pop, right? That's what I want. I want it to kind of see what it does at this 20-day, decide whether it wants to be above or below it, and then move strong up or strong down. So I'm looking for the 20-day to act as a catalyst for a big move for Pinterest. Next one is Twilio, and I think we have just like a couple more. Let me see. No, I don't have any Twilio notes. Oh, on my watch list. What the hell's going on? Whatever, we'll figure it out. All right, so Twilio is trading within the small little gap. I've highlighted it here with this square. Big strong move. So we had positive earnings, a beat on both ends. Twilio's in the tech service industry, and and everyone knows that tech at the moment is currently going through layoffs after layoffs after layoffs. Twilio is a software as a service company, and they I think that they're the biggest red line, the biggest expense for them is people, because the software is just like you can literally copy paste it, put another company's name on it, sell it to them, done. Sell it to them as a subscription, sell it to them as a managed service, however you want to do it. License it. How I'm not sure exactly how they're doing it, but the point is, it's not like you have to mine gold and then ship it to people, right? It's like Control C, Control V, send it. Now you're a member. Welcome. I'm at like 90% margin with this product that I just sold you, right? So they can make this money very quickly. Is the point. Especially now if they integrate, if they say the word AI, which I'm sure they mentioned it here. Maybe not. Maybe they mentioned it in the news or something. I don't know, but technically I like it above this 20-day. It's sitting right above the 20-day. It has this next target here at 52.65, and then we got some of these higher highs that we can test on these days, and then the 50 is the ultimate target. Very simple. Very simple. And if it does pull back, we want to see it maybe find support at this level here, maybe hold this 49.78 level for a continuation to the upside for Twilio. MU, I was looking at MU for calls, but we got some bad news out of China for MU. We'll see what happens. I mean, I don't know. Who knows how that's going to shake out for them. I'm not sure how big of a consumer China is for their parts. I mean, I'm sure they are a massive consumer, right? But who knows? I really don't know. But what I do like about it is I have some predetermined levels to test inside bars, so we can test the high of previous day here. I didn't bother to put an entry target at 68.40 if it's going to try to go to 68.60. Like, that's 20 cents. It's not worth the time. Take it above the break of 68.60. You could target that 70. Take it below the low of day. You could target the low of the previous day. Give you a nice dollar move. Dollar and 35 cent move, and then below that another $1.35 move, whatever the math is on that. So good targets to the downside. If it is going to give us the ability to play puts, the put side, it looks more favorable, and we can work our way all the way down into that 20-day moving average, back into this consolidation, test the top side of it, go back up, or pull back to this resistance here, test the top side of it, go back up, or just go up, right? For MU. So I like MU, nice clearly defined setup, nice and simple, nice and easy. D-Dog is, I think, the last one. So I mean, we haven't traded this name in a very, very long time. I don't like charts that look like this, right? Even like this was kind of hard to find a good setup. I like charts that look like this. Gappy move, break through all the moving averages with an earnings catalyst, continuation, test the 200-day, rip through the 200-day, and now it's finally pulling back. This little pullback is giving us a massive opportunity for Datadog. Datadog is, again, another tech services industry. I think it's I forget what it is. I don't know if they have like CRM, or if they have like actual cybersecurity. I'm not sure exactly what it is, but again, it's just another industry that stands to, it's like you get rid of your people, but you can figure out how to, get acquire new, and most of their clients are enterprise clients, larger companies. So if you can find your account reps who are making who have the right relationships and already have their clients locked in and have those and can leverage what they have without having to bring in all these new people to sell shit. It goes from, it cost me $100 to sell this $100 product to now it's costing me $20 to sell this $100 product. And then maybe it can go to, it cost me $10 to sell this $100 product. So it's like tech services, very easy for them to scale. I think like probably one of their biggest expenses are like a data center expense, and even like data centers are extremely cheap compared to like in-house stuff and real estate and stuff like that. But anyway, I think Datadog is gonna go up more. I didn't set it above the high. Like it did break below the low. Like it's not necessarily an inside bar, but we do have a nice clean setup to the downside. If we break down, test that 88.28, break above the previous day high, test 97.31, it gives you $3 in either direction to start, right? At least one day you can do. If it does break, you have that one candle you can fit right there. You have that one candle you can fit right there. If it doesn't break, maybe it'll take 2 or 3 days to get to these targets, but either way, let it break in whatever direction and then continue to run it in that direction for a few days. Now notice we did range a bit. D-Dog likes to range, so maybe it does the same thing here, so don't get caught in that. Let it actually define the direction for you, okay? Keep it simple. Let's see, is that the last one? Yeah, that's the last one. That's it, guys. I did blow through this very quickly. If you guys have anything you want to take a look at, just drop it in Trade Floor real quick. I have like a few more minutes. EMPH. Zoom out. I wanted this for calls, especially when it broke out of this channel, consolidated. I wanted to see it go that way, but based on earnings, it fell down pretty hard. It does have a potential inverse head and shoulders for me here. We have that shoulder, we have a lower head, and then we have another potential shoulder here. I want to see what it does above that 20-day moving average. Above that 20-day moving average, it can test, that's your entry, that's your first level, that's your second level. The next one will be, like 183 or so. And this thing, I mean, this can give us some really, really good movement based on how well priced it is. 162 into 172, that's a $10 move. That's somebody's getting paid, right? So, and then if we can't hold this support that we've tested 3 times back to back, this support, then we can come back down to this 155.79 and possibly this 152.49. So right now, all eyes are on that 20-day moving average to give us a nice pop up or a push down, one or the other. For end phase, let's see, Visa, oh, this is super bullish. I mean, it's back into some old levels. You could tell by the color lines on the chart if you've been with us for a while. You got a nice inverse head and shoulders. We go to the weekly. Nice inverse head and shoulders, and I'm bullish. I'll tell you why. Inverse head and shoulders, higher high here, or higher high, higher low. new high, new low, right? Lots of wicks on this. Lots of wicks. But I like the cup and handle. I like the inverse head and shoulders. I like the higher highs, higher lows. I like the triple tap going on right now. There's a bit of a triple tap right here going across. There's also like a more local kind of triple tap going on over here, right? So there's a lot. Well, it's sitting at resistance, but I think overall there's a potential for a nice continuation move to the upside, especially based on this pullback all the way to the 50. Nice bounce, consolidation. Sellers to control, buyers stepped in. Sellers to control, buyers stepped in again. Buyers have control of this clearly, since it's been way down here at 175. Now it's at 250 or 230 rather. So I see the triple tap on, from this line here, and then I see the local triple tap over here. I want to see it above the high of this day is 234.34. High of the previous peak is 234.81. So I would just take it above 234.81. And Visa can give you one candlestick in the morning that'll break all of these levels out, right? It'll break through all these levels. And then previous levels are obviously intact. We got the 235.53. Above that, we got the 239.99. So the hard part about Visa is trading it when it does this, when it's choppy like this. So if you're interested in it, I would buy a bunch of time. Maybe some June monthly expirations, the mid-month expirations, and maybe even beyond that. For Visa, but this is a good one. It pays a lot. Visa, I got a really funny story about Visa. I'll save for another day, but I don't trade Visa, and there's a very specific reason for that. But it does have a very nice setup on it on the daily. I didn't lose money on it, but I almost lost my whole account on it, and I gambled and it worked out. But I don't trade Visa anymore. And the reason why I like Visa, I'll tell you why, is because money's tight and everybody's moving to credit, and credit utilization is the highest it's been, I think, maybe ever. And there's like, I forget what the number is, but it's like just an insane amount of people that are in debt because of monetary policy has caused people to be in debt, and they're using credit as a vehicle to use, to not have to use their cash. And so Visa is going to be a benefactor. Airbnb. I need to see Airbnb above that 200-day moving average. If you want to get bullish, you need it above that 200-day moving average. You could test it. You could test that 100-day as the next target. What the hell is this? Did I just write that? Oh, I don't know what that is. I guess it looks like a date. I wonder if it's I don't know what it is. But you want it above that 200-day moving average. Test that 100-day at 113.41. It looks like it rejected it pretty hard. The risky play would be take it at the entry, take it at the break of day low, and come and test some of this previous previous support here. The much better play, in my opinion, would be let it come down here and break below this level into that $100 level. Right underneath that support, $100 becomes a magnet, or hit that support and bounce, and then test it. Let the 200-day be your target. I don't like the setup where it's at now. This is risky, but I would take the play off of this line here, either up or down, personally. And if it opens above that or around that 200-day, I want to see it take the break of the 200 and hit that 100-day, and then hit that 115.42 for Airbnb. Let's see, Pack B. Pacific Biosciences. This looks like it's now. I like the setup. I do not like the fact that it's a $12 ticker. But I do like the setup. Has some consolidation, nice small, strong move down. I don't know what the hell this candlestick is. It looks like it might have been a late reaction to earnings. And then I got an ambulance that's passing by. Hold on. So nice move down, making higher lows. Now we're in an area we have the kind of a cup and handle here, kind of a inverse head and shoulders. I like seeing lows get higher. That's the point. I just like seeing lows get higher. That makes me feel confident when about looking at these things. Forget about what the pattern's called. Forget about how people describe it online. Like, it's just the lows have gotten higher, and that's very bullish. When lows go higher, that shows strength. So above this line here at 1290, it can probably hit 14. I would target the previous candlestick's high here at 1445. I just don't know what the hell's going on with this candlestick here. Like, I don't know if that's demand. I don't know if that's supply. I don't know if it's a glitch. Like, I don't know what the hell's going on with it, but that's an area that I would target if it does, especially look how tight it's getting. Look at all these. Let me zoom in on it. Look at all these dojis. So many dojis back to back. Now, so much indecision. It's showing strength. This can easily break down pretty hard too. I mean, if it doesn't break it above that level and make a new high, that can easily break down. And this is also looks like it's a kind of a rising wedge vibe going on here, right? Let me get rid of this. Let me bring this one down a little bit. There. And all this price is pretty much within this wick. So if this is like a little mini demand zone sitting here, maybe a 30-minute demand or a 1-hour demand, and they're just chopping away at the prices, which is why it looks so wicky and so nasty. Once that once that supply is done and there's no more sellers, this can really rip. Or you have one massive whale that's sitting right here that's just waiting to sell all his shit, and it can really fall. So take it off that line at 1290. See what it does at 1290. If it rips, let it show that it's going to actually stay above this level. I would let it form a whole entire candlestick above this level before taking it to the upside. I would, to play this to the downside, it would be really, it's going to be really tough. I also don't know how liquid this is, if at all. I would play it below this level. Like, I just don't like where it's at right now. It's all this price is within a range of this one candle, so it's just in a weird spot. But it does look like there's a potential massive move coming out of it, and either up or chop its way back down and then break after the chop. I'm just not sure what it's gonna do. But it's a $13 stock. If you're buying shares, I would load and go for the ride. Especially if you think that there's some potential news coming out that's gonna elevate their stock price. They did not do well on earnings. However, the price of the shares did not really reflect a crazy negative reaction the way that it did here on this day. It looks like none of the earnings really affected it. It just moves how it wants to. But I would with this, if you're interested in trading it, I would look into go to FinViz and see what they have. See when the last time the CEO, CFO, directors, managers, when they've purchased or sold, and just follow them. Like, don't complicate it. If they're selling, sell. If they're buying, buy. Keep it simple. And also, I would go into their website, see if they're hiring, right? See if they're hiring. I would also go into their. You could check Glassdoor too and all those other stuff to see what the sentiment is working for them. And then I would just also see what kind of projects they have in the works, any expected events. I know, like, this industry sometimes has, like, they have like 3 to 4 day conferences where they announce all these new FDA approval stuff. So I would just look into that kind of stuff before deciding whether you wanna continue to trade it or not, or take a trade in it or not. Definitely look at whether the CEO is buying or selling. That'll be a big clue for you. But yeah, that's it, guys. I mean, we're at 1 hour to the minute, so I think that's suitable time for us. No technical difficulties today, thankfully. So you can catch this recording on the back end if you are interested. Thank you guys for your time. Much appreciated as always. Very excited for this week. I'm very excited for the small account challenge I will do in a couple of weeks. And I want to see everybody participate in it, whether you have a small account or not. So yeah, very excited, guys. Thank you for being here with me tonight, and I'll see you in the morning. Peace.